welcome to Traders Group. Let's start this evening's proceedings by once again looking at the S&P 500. Why the S&P 500? Because it's the predominant index that drives all else, whether we are looking for opportunities to trade or looking for opportunities to invest. It is the predominant indice to watch. I just want to follow through with what I opened up last week, and I showed you the annual return, and I'm talking to the investors in the room, the annual return of my personal account. And I just want to make a point that I've made in the past, and that is when we look at the markets, and if we're just focused in on an index, the index really doesn't look like it's gone anywhere. It looks like it's gone sideways for months. And the point that I've made in the past, and I can now prove, is that the index might be going sideways, but as we are all aware, hopefully, that doesn't mean individual sectors are going sideways. In fact, individual sectors are, in some cases, making new highs in the market. Therefore, as an investor, you would be very slow, I can't think of the right word, to wait for confirmation when a market's going through its accumulation phase, because you've missed out on significant growth within individual sectors. So I'm talking specifically to the investors in the room. And I can prove it because time's moved on. And I just picked up the April 4th low, which was only 6 weeks ago. And I just ran a report on my own account to see if I was fully committed to the market on April 4th, which I was, what did that represent in terms of return over the past 6 weeks? Or would I have been best to wait for this market to confirm or give me some sort of clear signal that it was going up? So I did the report just a moment ago. The answer is it represents 6.84%. So let's round it up to 7%. So by getting in on that date or being committed to the low could end up representing 7% of the overall return coming up this year, which is massive. So what I'm hoping for is that on screen we talked about a pattern within a pattern. The market finishes its pullback, which I'll talk about in a moment, and we push up into the end of the Australian financial year, and there's greater than, it'd be wonderful, greater than 17% in my account. That'd be fantastic. Last year, I think I checked it was 12.25, which was a little bit under what I was expecting due to currency movements, but this year it's going pretty well. So let's have a look at the index and just see what I feel is about to occur. We have talked about extensively that this market's was in a very large triangle pattern, which had recently broken to the upside. We'd also talked about, as of last week, the market, both in Australia and in the US, was in a position which was well above its moving average. And we know that when markets move too far above their moving average, they have this tendency to revert back to the average. Okay, so that's where we were last week. So since now and last Thursday, what's happening? The market's been backing off and allowing the moving average to catch up to the market. I can see a upward move in last night's bar, but with a market on the overnight market pointing down, I would not at all be surprised, and I am anticipating that the market continues to the downside. So this little pullback that we are observing, I don't feel is complete at the moment, and it'll probably take another week to happen. Markets normally don't pull back in 2 days. It's not how it works. And when they fall, they often do these one-day reversals. So in the not too distant future, with a probable continuation of this evening, I would anticipate that when we're here next week, we've got a clear market that's done a test and a retest, which confirmed and pulled back which is the same picture I drew last week. It just hasn't done, I believe, enough to pull back. Could it come and pull back right to that could it come and pull back right to that long-term trend line? It could. It can do anything it likes. And if it does do that, it talks to the momentum or the future strength of this index. We've done this many times. Shallow pullbacks represent high momentum. Very deep pullbacks represent very low momentum. Therefore, I'll be watching very closely for the depth of this pullback. And if it's a shallow pullback, it probably represents one of the best times to start directional trading that could be offered to you since, for a long time, since back in 2017. So it's usually at the completion of what I refer to as the W and V, where you start to get what's called the fastest rate of change in price, and that's what would be offered to us in the very near future, probably at the end of maybe end of this week's tomorrow, maybe towards mid next week, end of next week. Markets don't do what we'd like to do them immediately. What we'd like them to do immediately, but it's getting to the point where it's set up. So if I look at the overall picture of this index, putting aside all the small market movements and the completion of patterns, it's extremely bullish. There is no fundamental, other than a fundamental that we don't know about, that is probably going to stop this market from continuing its upward trend. I was just listening to the news the other night, and they're talking about an unprecedented coordinated global bull market with I don't know how many countries. It was this massive number of companies, which are all in serious periods of growth. So we can't avoid that growth, and it's all a good story. Everything's good. If I look at worrying indicators that the things that I look that can tell me there's a problem, the two primary preemptive indicators that I've got is volume and new highs, new lows, and advancing and declining stocks. The advancing and declining stock number went up significantly from last week to this week, with the market declining. So last week it was 260 advancing, 229 declining. This week it's 276 advancing, 213 declining. So that's a big number. Once again, it's not the number that really catches my eye. It's the volume of turnover within those numbers. And excuse me, the volume of turnover within the advancing stocks are 30% above the volume of the declining stocks, which is a pretty big turnaround. That is significant. So the market's backed off, and the advancing stocks have increased on increasing volume, the fuel that drives the market. In terms of new highs, new lows, last week there was 13 new highs, 17 new lows. This week, fairly decent turnaround, 22 new highs, 12 new lows. So all the internal numbers support the contention that we've got an ongoing upward moving market. Other elements that I look at to tell me that I'm probably right would be the VIX. The VIX is the fear index, and we always watch that to give us some indications of breaks to the upside. And as we just bring up the VIX on screen, we can see there is no such thing as an upward break, and I'm not talking about one-day moves. I'm talking about breaks of trend, and the trend on this is not dramatically, but it's sustainable and obviously heading down, and there's no break of trend up. Therefore, there's no worry or concern from the VIX. Other sensitive areas of the market would be IWM. IWM, because it's mid-cap, and mid-caps tend to have a much more, they tend to sometimes lead the market. And as I look at the IWM, we drew that big triangle picture up on screen many weeks ago, and we can clearly see a market that has not only broken above the previous swing high, which was mid-April. Not only has it broken up and closed above the swing high in March, it's broken into a new high. So IWM is in an all-time high. That is not bearish. It's extremely bullish, and it's looking great. Just checking out other coordinated things or elements to global markets that I would like to see to make me very convinced that the market's heading to the upside, and that's Europe and China. When I look at Europe, it is not as convincing when I look at EWG, but there is a currency effect on this chart. Fact is, it's broken out of its triangle and continues at a very slow momentum to try and do a higher high, higher low. What is of more convincing is when I look at the DAX. If I look at the DAX, we drew this W pattern on the screen many, many weeks ago, and it confirmed, broke, and continues to break very strongly to the upside. Other elements to global markets would be Shanghai Composite, first of all seen through FXI. FXI has finally broken out of that triangle, which is a really bullish, I suppose, bullish sign after a protracted sideways move with 4 touches to the declining triangle, but now it looks like it's about to break. Looking at the Shanghai Composite, does it support FXI? Shanghai Composite is not looking that great, which is still kind of surprising because we've still got one of the most correlated industries within Australia, metals and mining, all breaking to new highs, and Shanghai Composite doesn't seem to be able to even put in a base. I don't offer any explanation. I tried to offer an explanation due to discussions between the United States and China. I have no other explanation why Shanghai Composite is so behind other indexes on the world, in the planet, around the world. Coming across to the Australian market, looking first of all at EWA. EWA being the exchange traded fund, and it is looking very similar to the S&P 500. Has broken out of its triangle and is doing a series of higher highs and higher lows. Most importantly, looking at XJO, which is our local ASX 200, bringing that up. We've followed this extensively, and the comments that were made 2 weeks ago was the market was a great way, or a great deal extended above its moving average. Markets that are extended above their moving average have to do a time or a price correction. It's kind of done both. It's exactly, or it's below where it was 2 weeks ago, therefore it's a time correction, but it looks like it's falling into a price correction with the market's moving average catching up to it slowly but surely. Therefore, I don't find this unusual. It will, and hopefully, coincide with the pullback, the small pullback on the US markets, find a low somewhere at or below the moving average. Even dramatically, it can do this, it could dramatically go to the breakout point, which would be the downward sloping trend line. And at that point, we've got an upward moving market, hopefully into the last month of the Australian financial year, which would polish up all our results for our investing superannuation accounts. So it's shaping up to be a reasonably good year, and you can't complain. Looks good. There's no downward moving markets. All the global economic forecasts are good, and it's just looking good. Okay, so let me just come across to other elements in the market which also support the contention that we're about to move into a strong upward move. For those people that are involved in XIV or VXX system, would be aware that the XIV was taken or delisted and it wasn't replaced. There's always been another contract, which is a volatility exchange traded fund called SVXY. Now, why am I showing you this? Because in the context of SVXY, there hasn't been a trade in this contract for 4 months. And the reason for that is that there's been no roll yield. Now, as of 2 days ago, or for this market to have a big move to the upside, the futures contracts, for those of you who have looked at this, need to go into something called contango. And contango has produced a roll yield and given a buy signal on this instrument only 2 days ago. That's actually significant because there's a high correlation to a futures market in contango and an upward moving equities market. So that's significant. That's actually quite significant. So there's a lot of evidence suggests that we are at the beginning, and just at the beginning, of a decent move in equity markets. Can it be, and I'm talking about US equity markets, can it be derailed? Of course it can be derailed. Trump can talk too much. Anything could happen. But technically speaking, all the evidence suggests strong upward moving markets into the next weeks or months to come. Volume on all indices is strongly supporting that also. So on everything, whether I'm looking at EWA, IWM, SPX, institutional buying volumes have grown since last week, even though the markets are falling in small counter trends on some indexes. Institutional volumes are going up, which supports institutions are buying in a falling market. Therefore, the market just has to bottom out, and she'll start to take and the next move to the upside. Let's have a look at the currency markets. Mike's asking to explain contango. Mike, to explain contango, I'd have to pull out some slides. It's not something that I could explain via words. I can only explain via pictures. But if you'll hold that question to next week, is that okay? I'll bring up some slides and I'll explain contango. I've got to write it down. Okay. So I'll also explain, I need a drink, one moment. In addition to explaining contango, I'll have to explain backwardation. But it is damn interesting, and there's a high correlation in those terms. They sound fancy terms, but they're not. They're just talking about positive and negative roll yield as it pertains to futures contracts. But the whole thing feeds into the changes in movement of equity markets, and just occurred 2 days ago, 3 days ago maybe. Okay, so I've got that on my pad to remember for next week. Let me have a look at the currency markets. And I'm just going to come across to FXA, which is obviously Australian exchange traded fund based on the Australian dollar. And on my wish list coming into the next few months is an ongoing falling Australian dollar. Is that possible? I probably don't think it is, because we've had this amazing fall in the Australian dollar, down to about 64 cents. And, I just got to go to a weekly chart to get some perspective. It's too hard to look at this on a daily chart. I can see this, the last fall is now 100% extension of the previous market fall. Where am I getting the numbers from? Let me draw them on screen. I'm not going to get rid of the Fibonacci ratio, but back here, this is a weekly chart. So back in late last year, there was a fall in the market, and this current fall is roughly equal to the previous fall. And I could go back in time, and that's kind of equal, and this is kind of equal. And what usually happens within ranges, the ranges usually don't pick a low, but it's a point in time where I would really focus on a shift. And I'd be saying the same thing if this market was at 1.618. So I am looking at a shift, and I do see a shift in volume numbers, which are slightly positive as of this week, but it's a little bit early to call that as a low because there is no structure to a low. It's just a market that's fallen down to 74 cents, hit the 100% extension, and has done 3 weekly bars beside each other. If I come back to a daily chart, what I need to see is what I've said a million times. I need to see the evolution of accumulation, and there is no accumulation via any pattern on screen. It's still a downward trending, price action, which needs to form a pattern, break above its average, and be supported by volume. And none of that has occurred, but it is possible. And I see the early stages of that, but it hasn't occurred. So I'll stop there because there's no more to say. There's not enough evidence to suggest there's a low. So if you had to force me to speak and call it, well, it's still going down to proven otherwise would be the answer. Coming across to the US dollar, and most of the information that I'm reading is the US dollar index. This is a chart of the US dollar versus the Australian market, and it is in what appears to be in a strong uptrend, which has not broken trend. But within this US dollar, I see some evidence. There is still strong buying behavior, but it has weakened. But again, there's zero evidence that that's a top. Let's come to a weekly chart to get some perspective. It has been obviously in a strong downtrend with a breakout to the upside, just like the Australian market had the break up to the downside. Also, with this particular index, it's done equal to the previous range. It is at that point where you expect a shift, but the shift hasn't occurred. So I can't call it yet, but if we see a break of trend on either contract supported by a volume either way, we've got some evidence that the market's about to shift. Coming across to the gold market, I just put a big question mark on gold. I said, I don't know. And I don't know. All as I can see on the gold market, it has done a visitation outside its long-term upward moving trend line, but that visitation is not necessarily a breakdown because the market's done that visitation a few times before. And I could, bring down that bottom trend line and track it a little bit differently. I'll do that. It's not totally correct. It's probably better placed. Approximately there, which would make that a triple, just a nice touch. So it's at this point where you would expect to see some evidence, if it was going to find a low here, of accumulation. The accumulation is from volume and price. When I come across to a daily chart on the GLD contract, it's a big sharp fall as of last week, and there is no evidence that there is a accumulation phase on screen. That said, often when you see big falls, they start to form a inverted head and shoulders pattern. If we see a big rise next week, if we see some sort of left-hand shoulder, we could anticipate, in conjunction with an increase in institutional buying behavior, that is a low, but there's no such evidence on screen. So I'll just stick with I don't know what's going on. I've got a big question mark on my pad. I really don't know. As further evidence comes in, I can call it, but there's nothing there at the moment. Coming across to oil. Oil has been, of late, and I believe is, the strongest sector. And I'm talking, when I say oil, I mean XLE, is one of the strongest sectors in US markets, and it's done it very quickly. And it really does look strong. Looks like it's going to do it again. So this is USO. It's going to clean up this chart, add in a few trend lines to just put in a few swings. It certainly does look quite strong on oil. Coming across to XLE, which is obviously the exchange trade fund representing the whole complex. It's also done a very strong move, and on the basis of comparative relative strength, it is a leader within the market at this point in time. And that said, in the past week, at least, I'm just looking at some numbers. Yeah, I better be careful here. I just saw a shift in volume behavior on this, which said to me it probably is not supported, but it's really too early to even say that. Sometimes I see things that I'm talking too early, so I'm just going to hold off on those comments. But I just saw a shift in the behavior of volume, which says that it's not going to be as strong as it has been, but we wait for some evidence of that next week. But at this point in time, just coming across to a sector rotation chart, focusing on the Australian market, we can see that XLE, okay, Alan just points out it's coming up to the US driving season, spring break, which would be high consumer demand for energy, especially fuel-based products. So, on that fundamental, Alan, you're probably quite right. I'll probably continue on up. So I'm not saying anything negative. At this point in time, as I stand here today, some of the strongest sectors are, well, one of the strongest sectors is oil, but oil's not a sector, it's an industry of energy, and needs to be closely watched, if you are looking for yield within a portfolio. XLE, by definition, is the strongest sector at this point in time. And I'm reading numbers on the right-hand side of my screen to get that information. I'm just adjusting my screen a bit because it's a little bit strange. Okay, just have to put that away. So energy is the strongest sector, and we'll include obviously USO. Utilities is the second strongest sector, which I don't like. I generally don't participate in. XTL is the third strongest sector. I don't participate in that. Seems a bit strange that I'm not participating in the two strongest sectors. I believe they're short-lived. Utilities is a defensive sector. If the market's about to have a big move up, you watch that fall away in the next few months. Hence, I'm just backing something that I've seen before, not getting involved. The next strongest sectors is the healthcare sector, the metals and mining sector, as represented by XLB, the tech sector, the industrials, and then the worst sectors are consumer. Just give me one moment. This is United States. Consumer discretionary, which I'm surprised at. Just give me one moment. Sorry, not consumer discretionary. Consumer staples and finance appear to be the two bottom sectors within the US markets. I'd just like to point out that I think I mentioned this last week, even though a specific sector can look bad, if you dig through and have a look at the specific industries within finance, you can find specific industries which are bucking the trend. And I think I've talked to this before, I am trading some finance stocks in the US, but they're very specific to one particular industry. And the industry are broking companies in the United States. And I'll just show you, I've got two. I meant to bump up my holdings, and I'm holding E-Trade. It actually doesn't matter which broking company you've got. It's just going through the roof. And also Interactive Brokers, which I'm, as you know, an agent for, it's going through the roof. And even if I had other broking companies on the screen, they say the same thing. In stark contrast to finance in general is not looking wonderful. So if you hunt, so here's a finance chart. That doesn't look anything like the other two charts I showed you. If you do a little bit of work, sometimes you can find specific industries within a sector that are not acting like the sector. I just happened to pick that one up early. I'm in it, very happy that I picked it. So I have got some financial exposure in the United States, but only in that little niche industry. Okay, just give me one moment. Just coming back to the sector rotation chart. Okay, so something interesting on screen that I'd like to point out. I've pointed this out to you before. XME, see this blue thing down here? It's metals and mining in the United States. It's doing something called a right rotation. What that means is after a pullback, it is getting ready to make a big move. Let's go look at XME on an actual chart, because that's what this sector rotation chart tells me. So let's just come across to XME. And this is the US chart. It's just taking a few seconds to upload. Just give it a moment. Okay, so this is XME, and we could draw a big triangular pattern on there. And it is getting ready to break, and it actually is already broken. What you'll find is this really starts to pick up some momentum in the next few weeks. And that deep loss of momentum on the rotation chart is that sideways move. So that's all finished. All the markets are about to go into breakout phase. So this is all, pretty interesting stuff. So should you have some, some metals and mining exposure in the United States? Absolutely, I have. Let's go check it out. I don't look at it every week, but I do own TX. That's looking fantastic. I own GGB. That's looking okay, hasn't broken. I own STLD. That's it, that's all I own. Had a major breakout in the last few weeks. Just 3 shares. Let's come across to the Australian market in terms of the strongest sectors in the market. And in Australia, the strongest sector within the Australian market is the healthcare market, followed by industrials. Healthcare, remember, is dominated by some very large US exposed companies like CSL, and ResMed, I think, is another one. And I think the growth is probably due to their currency exposure, but whatever the reason is, healthcare is leading the Australian market. We've got industrials, information technology, and as you can see the metals and mining chart within Australia, it's doing the same right rotation. Just as an aside, quickly, let's go to the metals and mining chart for the Australian scene and see what we can see. Give me one moment. It looks a little bit more advanced than the US chart, coming across to metals and mining in Australia. And this is not something we haven't talked about for days, weeks, and I don't know about months, but we've been talking about it for a while. Metals and mining in Australia, still waiting for the chart. Why? Why have I not got NBN? They're all over around our area at the moment, NBN. Okay, so here we go. So XMM in the Australian market has had and continues to have this major breakout. So I can't remember if I hold any, but I'm pretty sure I do, because I just forget what I hold. I'm not looking at this every day. Within the Australian market, what do I hold? I hold IGO, hasn't gone anywhere. I hold XOZL, has had a major break to the upside. I hold, which is not necessarily metals and mining, it's materials. CSR, which has had a huge fall in the last week. And I hold LYC, which was talked about, which has had a big fall. I'm still going to hold them. I might have to have a look at them, but they are 4 stocks in the context of a large portfolio. I probably won't do anything with them just at this point in time. Coming back to the sector rotation chart, just summarising: the strongest sector, healthcare; second, information technology; then metals and mining; consumer staples; energies; consumer discretionary. Guess what? Look at what consumer discretionary is doing. It's doing a right rotation. Well worth a look. I've already mentioned the industrial sector, property trusts, and the worst sectors within the Australian market are financials, utilities and telecoms. Once again, within the financial sector, we all know what's been holding it back. It's been the banks and the poor stream of information. But there are, again, within the financial sector in the Australian scene, diversified financials has been the industry. I have got exposure to them, and I believe they're doing quite well. Just coming across to have a look at first of all, the Australian Financial Index, which is XXJ. I just want to see if it looks any healthier than it has been in the last few weeks. And the answer is not really, but that said, it kind of looks like an accumulation pattern on screen, which this time hasn't broken to the downside. Therefore, if this market finds a low, and if it breaks up from here and breaks above that long-term downward trend, we finally have a low on the financial market in Australia, and that is obviously a good thing in conjunction with XMM, the second largest industry or sector within the Australian scene that we need for our index to break strongly to the upside. They're the 2 biggest areas of exposure. If everything else follows, which it does look like it is doing so, again, I'm just looking towards the next 6 weeks into the end of the financial year. I want to see things like XIJ breaking into new highs. I want to see XHJ leading the market, which it is. I want to see things like XSJ, staples, breaking into new highs, which it is. So once again, I can't see anything negative within the Australian market, all looking really, really good. And I just put up the industrial sector, which has had this big, deep pullback, but overall, if that stops that pullback, it will be looking quite strong. Just give me one moment. Just give me one moment. I'm just reading my pad. Okay, there was one area of the market which I don't actually have any exposure to, and I was a great advocate of. I just want to mention robo stocks. I need to go back and have a very close look. Just the fundamentals behind robo stocks. They have, I suppose, along with the rest of the market, had this big sideways accumulation phase. And maybe next week, I'm going to go back through these and have a look at specific robo stocks, FinX stocks, bolts, which were robotics, and specifically artificial intelligence, gaming, and blockchain. Um, I have not been a great advocate of cryptos or blockchain, but I am changed my ways. I am an advocate. I see such a fantastic future, and as the excitement dies down, and blockchain technologies become mainstream, I think we will see cryptocurrencies have their place, but it has to be under the current financial structure, meaning real exchanges, not pretend exchanges with unregulated entities, which that's just not going to work, never will work. So the current structure of that, of the currency area, has been, and Mike's got some comments on this, has been chaotic. But the what I read is it's such in its infancy. In time, I think we'll see big things out of the blockchain technology. That's one, and I don't know how the cryptos are going to come out, but something will happen if it comes under a regulated environment. I think it will. So it is interesting, but it really looks like it's all gone quiet because it's gone south. But I think that's the time when things in the background it's evolving. It's going to take many years for it to consolidate. So that's another area I've got to revisit. Blockchain technologies and companies that are associated with implementing that technology, I believe, will be leaders in the market in the years to come. Just coming back to some of the stocks now that were talked about or given to me earlier as I logged in, and I just want to just create some space on my screen. And just give me one moment. Okay, first of all, let me type in some of the lithium stocks that Alan gave us earlier. They are GXY. So again, what's the significance of lithium? Well, everyone knows we're shifting, the global economy is shifting, and technology is shifting to, electrified equipment and transportation networks, and the lithium is a part of that story. So these are Australian lithium, ORE. I haven't looked at these for a long time. Again, they're things that I take my eye off. I probably get excited about them when they're in the markets, when they're on the tally, and then I take my eye off. Just give me one moment. I've got another one, S32. And okay, it's all ASX. Okay, so let's just have a quick look at this grouping. I'm going to go to a weekly chart because I need perspective. First of all is S32, unbelievably bullish, breaking into new highs. I won't. Yeah, I will. I will bother. Just give me one moment. I'm just going to put the accumulation and distribution studies on. I just need to see, are they supported by buying behaviour, which would get you interested. And I've got a bit of spare cash at the moment, which I've got to put into my account before end of the financial year. So this is stuff that I really should be looking at actually now. Okay, so let's get rid of, let's click the button twice on unbalanced volume. Just give me one moment, edit chart. just get rid of on-balance volume and get rid of volume. I don't need volume. Okay, so this is S3 2-weekly chart, extremely bullish. It is supported by an increase in strong volume behaviour. Alan's just pointing out that S32 is an offshoot of BHP, not just lithium, but manganese, silver, aluminium, coal, and lead. Thanks, Alan. Okay, ORE. On a weekly chart, it's obviously had a pullback, so what? It is a strong upward moving chart. This is a weekly chart, series of higher highs and higher lows. It's having a pullback. For the last 4 weeks, it's been strongly up and volume is starting to point up. Let's go down to a daily chart, different perspective. We'll see the pullback is a bit more dramatic. I think it's what it's doing here. It's finishing, completing a low, which is accumulation, breaking trend, and doing a series of higher highs and higher lows. All these stocks are pretty hot. GYX. Did I say that? I misspoke. I meant GXY. Same thing. Done this broad base pattern, which will probably turn out to be a cup and saucer pattern, maybe. Ugly as hell, but starting to break trend. It's just beginning. Is it supported by volume behavior? Answer is yeah, it's just starting to turn up. So market's going sideways. Volume has been declining, but is now starting to kick in. So again, these are interesting stocks which would be long, not necessarily long term, but good additions to your portfolio. And there's probably a stack more of US lithium type stocks also. Okay, just give me one moment. Okay, so I'm just going to go back to LYC, which I own, and explain why it fell, because Alan's just told me. Okay, so LYC has had a fairly decent rally, and what we can see of late is a very large fall in the past week, and the fundamental reason of that is due to the government in Malaysia, something to do with one of their mines there. I'd have to Google it, the exact reason. That's fine. Don't panic on these stocks. If it's not a major negative fundamental, it can recover really, really quickly. Okay, Mike is just pointing out TAN. Mike, is that Australia? I'm just going to type in ASX, see if it is. So TAN, it's giving a few seconds to upload. Okay, I made a mistake. It's US. TAN is a solar index in the United States. I'm looking at solar personally at the moment for both a business that our family owns, a brewery of all things. Does everyone know I'm a brewer? No. A brewery that we own, and also a residential home. And the model for Australia and solar, the uptake is unbelievable. It's like, it was just huge, and the pricing is actually, you can get into solar now for the cost of your bill, so it's kind of a no-brainer. Both commercial applications and residential applications, and this is a pretty interesting chart. Strong accumulation and distribution support with the market looking like it's about to break out. And we come over to a weekly chart. All these stocks that we've looked at, guys, are fantastic, and I will be pinching a few of these ideas for my own portfolio. Fantastic. There are other solar stock or solar, I think, ETFs which are looking really good. So all good ideas. All these stocks I will be definitely considering in the next week or so. Just give me one moment. So Alan's asking me what beer. I'll give you our company's name. It's Hopped Up. I actually I inherited a brewery, or our family, or my wife. Their dad passed away, and he runs a boutique brewery, or did run a boutique brewery. So we inherited Hopped Up. Hopped Up's the name of our brewery. Okay, so TAN is looking good, and I'm just going to go to this last one that Mike's given me. RUN, Run. Is that a stock? Is a good-looking stock. Mike, what do you mean by RUN? Is that a stock code? I need new glasses. Oh no, he's just saying it's a part of the TAN index. Okay, so yes, it is a stock. So everyone knows that an exchange-traded fund isn't a single entity; it's an entity of many, many different stocks. And Mike's just pointing out that RUN as a component of TAN, just let's upload it, has had a really good move. Sorry for the slowness of my uploads today. I want to smash my internet connection. It's just as much as you. Just patience. It'll come up. It's coming. It's there on my screen. There it is. Okay, so this is a weekly chart of RUN. It's obviously had this amazingly strong move in the last few weeks on a weekly chart, coming back to the daily chart. It's looking like a chart that is a strongly trending chart. If this has a shallow pullback and stops here, it is increasing in momentum. So, something that's really good, very interesting, could be the beginning. You'd have to look at the fundamentals of these individual stocks, or if you don't like to get involved with individual solar stocks, you obviously go for the ETF and be happy. I believe. Okay, I've got to write that down. Alan's just sending me a message. I'll read out the message. It says, Paul, Trail, CFOS. Speed. Okay, thank you. I am very close to getting NBN. I mean, they're all around our area, NBN trucks everywhere, and so maybe by the end of this year, possibly, we'll see. But generally speaking, my internet's pretty good, but I'd like it to be perfect. Guys, that's it for this evening. I've covered nearly everything. Those people that are doing SPY, ETF, diagonal spread trading, there's been some fantastic runner wins. If anyone has got questions on that, you know where to contact me. And Mike, definitely I'll talk about your question, contango and backwardation next week. That's it for this evening. Thanks, guys. I look forward to seeing you same time next week. Good night.